What is Ichimoku Kinko Hyo? And by the end of this session, you should be able to understand what is Ichimoku Kinko Hyo, how to add it to chart, how to interpret and use the indicator. The Ichimoku Kinko Hyo indicator, or Ichimoku for short, is one of the most popular indicator in financial market that belongs to the trend family of technical indicators. The Ichimoku Kinko Hyo, which literally means one look equilibrium chart in Japanese, which was created by a journalist named Goichi Osoda with the aim of gauging future price movement, identify trend direction, determine future areas of support and resistance, as well as trading signal on the chart. On the surface, the Ichimoku indicator can seem complex when viewed on a price chart, but it is actually a very straightforward indicator. The concepts are easy to understand and the signals are clearly defined. Let's look at the features of this indicator and how to interpret it. The Ichimoku indicator consists of 5 components. The Tenkan-sen line, which is also known as a conversion line, is calculated by adding the highest high and the lowest low over the past 9 periods, then dividing the result by 2, resulting in a line that represents a signal line for reversal. The Kijun-sen, or the baseline, is calculated by adding the highest high and lowest low for the last 26 periods and dividing the result by 2. As a result of this formula, the resulting line will be a signal line for reversal. The Senkau span A, or leading span A, is calculated by adding the Tenkan-sen and the Kijun-sen, dividing the result by 2 and then plotting the result 26 period ahead. The resulting line forms one edge of the Kumo, or cloud, and can be used as a guide for identifying the potential areas of support and resistance in the future. The Senkau span B, or leading span B, is calculated by adding the 2 highest high and lowest low over the past 52 periods, dividing the result by 2 and plotting the result 26 period ahead. The resulting line forms the other edge of the Kumo that is used to identify support and resistance area in the future. The Chikou span, or lagging span, represents the closing price over the last 26 period behind. This line is used to show the possible support and resistance areas in the future. We'll go through the Ichimoku trading technique in details on chart and also how to use it with combination of price action. Let's begin with placing the Ichimoku Kinko Hyo indicator on chart. To place the Ichimoku Kinko Hyo indicator on chart, there are few methods to do it. The first method is go to Insert, then Indicators. Under the trend, select the Ichimoku Kinko Hyo. The second method will be the easiest one, as you click and drop it from the Navigator panel. To do that, simply go to Navigator panel, Indicators. Under the trend, click the Ichimoku Kinko Hyo, drag and drop it on chart. Now let's look how to use the Ichimoku Kinko Hyo indicator in trading. There are a number of ways in which the Ichimoku indicator can be used. These include determining the trend of a market, identifying support and resistance level, and as a signal to initiate a buy or sell order. Let's look how Ichimoku indicator can be used as a complete trading system. Market trend. One of the most important aspects of using Ichimoku is to look for the trend direction. This means that when the Senkau span A is higher than the Senkau span B, it indicates an uptrend. This is usually represented by a green cloud up Kumo on the chart. Similarly, when the Senkau span B is higher than the Senkau span A, it indicates a downtrend. This is usually represented by a red cloud down Kumo on the chart. Support and resistance. The Ichimoku are often used by traders to identify potential dynamic support and resistance level of an instrument price by identifying a spot where the current price meets or touches with the line. The Senkau span A and Senkau span B lines can be used to identify potential level of support and resistance in the market. When the price is higher than the cloud formed by the Senkau span A and B lines, then the Senkau span A line serves as the first support level, whereas the Senkau span B line serves as the second support level where the price is likely to rebound and move upward. Similarly, When the price is lower than the cloud formed by the Senkau span A and B lines, then the Senkau span A line serves as the first resistance level, whereas Senkau span B line serves as the second resistance level, where the price is likely to reverse and move downward. Here are a few examples of how Senkau lines act as a support and resistance. Buy and sell signal. The buy and sell indication are generated when the Tenkan Sen and Kijun Sen line cross each other, and the signal can be confirmed by looking at the close price, which can be an ideal entry point. When the Tenkan Sen line red crosses over the Kijun Sen line blue and the price closes above the cloud, a buy order can be initiated. Meanwhile, when the Tenkan Sen line red crosses below the Kijun Sen line blue and the price closes below the cloud, a sell order can be initiated. Here are a few trade examples that use the Ichimoku indicator.